You are looking at Frank Kane. I'm standing in for Sean today while he's off probably making millions of dollars somewhere. Welcome. Top line headline, Brent is approaching $122. It's the 24th of March, which marks one calendar month from the invasion of Ukraine by Russia. And I think it's fair to say that it hasn't gone quite the way that President Putin expected a month ago. I was reading an article earlier this week that said that Ukraine had already done better in fending off murderous aggression than Poland had in 1939, which I guess is heartening to some degree, though given the way things went subsequently there, we maybe shouldn't take too much consolation from that. But I want to start with Ukraine and the global implications and repercussions. And let's go first to Carol Neckley, CEO of Crystal Energy, an experienced contributor to this show, of course. Carol, you are in Abu Dhabi, I know, but of course you are an expert on all things European, indeed global. So let me ask you for an overview. We are 1 month in, but lots is happening in Europe this week. President Biden is currently in Brussels for a NATO meeting and talks with other European politicians. How far will Europe go against Russia this time, perhaps under greater American pressure? Give me your overview there, please.
Good morning, Frank. Good morning, everyone. Well, look, first of all, lots of people think that Russia has been the EU has been hesitating in terms of imposing sanctions that could target Russian energy exports. And I even ruled that out because of the vulnerability of, and in terms of dependence of the EU on Russian energy exports, particularly natural gas. However, it makes only sense when you are doing this kind of, you going through like kind of, I wouldn't say negotiations, but it's a process. You start with the milder sanctions, and as the situation escalates further, then you start unpack your tougher weapons, if you want. So I wouldn't rule out entirely Europe imposing some kind of sanctions on energy exports from Russia. I still find it a low probability, but it is being discussed today, and it could be imposed, so we cannot rule it out anymore. Now, the problem with all these sanctions, while they make people feel good because they feel they are punishing Russia and they are taking away from the market Russian oil and Russian gas, but if in terms of oil, that would be too simplistic because oil is a fungible commodity. It may leave the market from one door, but it comes again through another door, and maybe not necessarily in its crude status. It can also be refined into another product and then come to the market, the same market that tried to impose sanctions on it and kick it out. With gas, it's a little bit more difficult because of the nature of the gas business, but whatever Europe in terms of alternative is going to get, it's going to get a more expensive alternative than it has at the moment. So at the end, if we have sanctions today, yes, energy prices will increase. Russia can suffer because of loss of revenues, but I would say it's a loss situation because also Europe is going to suffer from dislocation and mislocation, if you want, of the market, which ends up clearing in the coming months.
There were stories around just recently, Carol, weren't there, that the Russians would insist on ruble payment for energy supplies from non-friendly countries. Is there any mileage in that? You know, would anybody in Europe go along with that?
You know, it's nuisance. The Russians know how to annoy other people. So they are creating more difficulties and increasing the transaction cost for particularly European customers. And yes, they will go along. I mean, you have contracts, you have obligations. And if you have big utilities, let's say in Germany, you will have to find a way to get that done in rubles. It increases your transaction cost, but I don't think just because of that, you're going to say, no, I will not go ahead. You do have obligations. You already have some purchases already coming from Russia.
Right. Peter Maguire, CEO of XM in Australia. Peter, good evening to you. Is it evening there?
It certainly is, Frank. Good evening or good morning to wherever you are.
Yeah, I'm in Dubai. But let me get a view from the other side of the world, so to speak, you know, from down under. I know Australia has largely mirrored US and UK Western response, the overall general response, hasn't it? But tell me what the current thinking is. How far will Australia go in sanctioning Russia? And in particular, what people there are saying about China. Which way will China fall on this? Will it go wholeheartedly behind Putin? This is your backyard, isn't it?
Yes, I think I'll answer that one first, Frank. The uncertainty leading forward is 26 million people in the country, conscious of where we sit and the ties that we have strategically to China as our largest trading partner. And certainly we don't want to upset them, because we're very conscious of what they did over the last couple of years in the sense of, blacklisting some of our commodity exports. There were about 7 or 8 of them. So they took our iron ore, but when it came to wine and it came to certain grains and so on. So I think that we're conscious as far as the relationship between the China and Russia. And one would assume that they will back Mr. Putin, and we aren't here to, we sit on a very much a knife edge. The man and woman on the street are probably mindful of it. The politicians have got a different agenda, and anyone that's got a relationship with China has to be careful of what they say and how they do things. So there's the first line. The second line is the uncertainty from domestically in China. They've got their hands full with the Evergrande situation, and the property market is starting to look very, very shaky. So I think they've got their own internal issues that are going to manifest themselves over the next couple of weeks.
Does that make it less likely that they will be stridently on the side of Russia against the West? Those internal problems, I presume that they won't want to add to those by risking any, Western financial sanctions.
Well, exactly. I think that's right. And yes, they've got their own issues to manage internally. So that could be their, I'm not saying a get out of jail card, but they'll play a very strategic hand as far as Mr. Putin's involvement in Ukraine and how that looks geopolitically. But we all understand, Russia is such a huge exporter as far as gas to Asia. I think it's about 37%, about 47%, I think, or 48% of European gas. So it's a huge elephant in the room, and it's going to be interesting how it all plays out over the next matter of weeks.
The man on the street in Sydney, in Australia generally, what's the sentiment there? Because there must be quite a sizable, I would have thought, both Russian and Ukrainian minority presence there, yeah?
Absolutely, and Chinese, of course. Yeah. So yes, it's we're a very cosmopolitan nation, and there's many different viewpoints. Strong Russian and Russian restaurants. Ukraine. There was certainly a large proportion of our, the Ukrainians are filtered across the nation, but Russia certainly has a large population here, and so do the Chinese. So that's going to be, again, the man and woman on the street, where their heart and mind is. It's I think that there's a lot of moving parts that are going to unfold over the next couple of weeks, Frank, that are going to be quite interesting from a geopolitical sense.
Okay, well, let's continue this sort of global tour, if you like, with Osama Rizvi, who's an energy and economic analyst at Primary Vision Network in Lahore, Pakistan. Osama, welcome back. It's intriguing, I think, how the Indian subcontinent, South Asia, and Central Asia will go in all this, isn't it? We heard a pretty robust defense of the Indian stance yesterday on the show from Narendra Taneja, and I guess that amounts to neutrality. But of course, Pakistan has different priorities, doesn't it? It has a proximity with the oil-producing countries of the Gulf. And also, it occurred to me that Pakistan was recently an ally of Azerbaijan, another former Soviet country, in its own conflict with Armenia. So tell me, 1 month in, what's the view from Pakistan about the, shifting global alliances that we're seeing here. Where does Pakistan sit?
Thank you so much, Frank. It's interesting what's going on. First of all, when we talk about Pakistan, or we can't compare ourselves to India. Pakistan is still belongs to the emerging markets and developing economies group, right? And as such, we have different priorities, we have different needs, and the whole scenario is different for countries like us. We are facing right now, amongst many other issues, we're facing an energy crunch, first of all. We're facing a lot of inflation, like everyone else, of course. We also, due to our geopolitical configuration, we are facing lots of defense issues as well, involving Afghanistan, certainly, and that relates our stance with India. So against this backdrop, it made quite a news when Imran Khan visited Russia amidst the war. So the first thing was that it wasn't scheduled then. The meeting was scheduled months ago, right? And as the diplomatic calendar goes, it had to take place, right? So there was nothing deliberate about the visit, first thing. And secondly, I would agree with what Imran Khan said, actually, regarding Pakistan's stance on it, that we cannot afford, as a country, we cannot afford to take sides. If you look at our situation, CPEC was the flagship program of BRI, Belt and Road Initiative. CPEC is our lifeline in terms of infrastructure development, in terms of job markets, in terms of energy, especially. There are lots of energy projects going on in CPEC. However, our largest trading partner is not China, it's the US. The major exports of Pakistan is, of course, textiles. Right? Textile is the backbone of the country's economy. Most of the exports go not to China, to Europe. Right. So what I'm trying to highlight is that we still retain this as much as we are close to China, we still retain a very critical, crucial relationship with the West, with the EU and the US. So, however, on the other hand, Pakistan, as I mentioned, is going through an energy crisis. There is a pipeline called Pak Stream Gas Pipeline, PGSP, that Russia and Pakistan are building together, $2.5 billion project. Pakistan is the 11th largest importer of LNG. So, we would like our ties with Russia to still hold on, given the realities of the geopolitics and energy and whatever. So, we have signed a $14 billion package with Russia. So when you're doing these things on one hand, and you cannot afford to be very categorical. And I think Pakistan's stance is diplomatically correct. We have officially said that we are neutral. Of course, we're not supporting the Ukrainian invasion. Of course, it's against the humanitarian principles. But at the same time, Pakistan has shied away from giving any categorical statements.
Right. So I think it's energy pragmatism, I guess.
Yes.
And I guess by the same logic, there's no way that Pakistan would get involved in any sanctions or breaking of trade links.
Yes. I was in a way I was surprised because I saw even one or two Western companies buying Russian oil at a discounted rate. This is 2-3 weeks ago. And
they got a lot of stick for it, of course.
Yeah. And Pakistan's import bill, which is just ballooning these days, more than 40% of our import bill is oil, is energy imports. So, Pakistan has taken at least the stance that we're not getting Russian oil at a $30 discount rate. So, we are clear in that regard. I don't know if it is happening in some backdoor deals, but it's not officially happening. So, yeah, it's as much as energy pragmatism is the way, we still have, saved ourselves from doing any such thing.
Okay. Yeah. Let's move on to talk about oil, because I said at the beginning, 122, nearing 122 and rising. And there are all sorts of different forces knocking this around, aren't there? We've seen increased COVID lockdowns in China, and that may spread to other parts of the world too. But on the other hand, we've seen big demand growth in the USA. I was in the USA a couple of weeks ago, and people, I tell you, are flying and driving like they haven't done for nearly 3 years. You know, what are the forces here, Carol, and where does it go beyond 122? Some people talking about 150 by the end of the year or even autumn time. Tell me, what do you think?
I think we have to be realistic and accept a high degree of volatility at the moment, given the circumstances and given the many unknowns that people are engaging in guessing how would they unfold. So it can go 150, can go 200, it can go down below 100. So who knows? So the point is that there's a great volatility, and it makes no sense for me to make any forecast in the current situation. Now, of course, Frank, you mentioned the growth, the strong growth in demand that you see in the US, but the longer prices remain sustainably high, the more it's likely to, the situation is going to be reversed, in a sense that people are going to fly less when they start to pay much more for their ticket flight. Now, you may think on individual level, I think, for example, a family of 3 or 4, that will increase substantially the cost of flying. And at a time when you have strong inflationary pressure and also central banks taking measures to try to tame the inflation and with, you know, fears in terms of some negative repercussions on economic growth. So there is this kind of big risk looming that may not be felt at the moment, but the longer the prices remain elevated, the more we're entering the territory of a slower economic growth. And already I'm seeing more and more institutions and publications talking about a looming recession because of the high inflationary pressure. Not talking only about energy prices. Look at prices of grains, of wheat, for example, of corn. And it's just not like you use corn to make bread. I had my brother visiting a few days ago, and he's a specialist in poultry production, and they are struggling because corn is a feedstock for poultry. So their cost of production has also increased significantly, and that will be felt by the average person in the street. So this is on the risk side. Of course, on the upside, we all know what is driving prices to these levels. You have the issue of Russian oil exports, with traders, some traders imposing some self-sanctions on themselves because they don't want to deal with Russian with sanctions, and they don't want to buy Russian oil. But at the moment, although we have this big discount between Russian crude and, let's say, Brent, you will always find traders around who are a little bit, I would say, ethically flexible. But you also have OPEC still sticking to its policy. Yeah,
I like the phrase, ethically flexible.
Yeah, I mean, we cannot expect everyone. Yeah. Otherwise, sanctions would have been effective a long time ago. But we don't want to go down that route. But we all know that lots of deals happen below what you and I perhaps consider as ethically acceptable. So lots of bits and pieces moving, and that's why you should expect all sorts of direction for prices. But at the moment, if you ask me today, I see the pressure on the upside rather than on the downside. Further down the line, I see the downside risk becoming more pronounced.
Okay. Pete, let's get a trader's view, can we? There was one very interesting item in the News Digest, wasn't there, about the idea of a margin call doom loop for trading outfits. They mentioned Trafigura with relation to this. What's your feeling on that? How serious a threat is that kind of thing?
I think it's got to be fairly serious, Frank. There's no doubting that we saw over the last few years, I can put my mind back to say, the last 15 years, margin requirements being ramped up. Have a look what they did with gold. Just put your mind back over the last couple of weeks, what we experienced with nickel on the LME. So, sure. We were looking at 20,000 a metric ton, 30, 40, 50, all of a sudden it's at 100,000. So the price volatility. Yes, I think that this is just a normal course of events. I was listening to Ed Morse in the last 36 hours, had an interview on CNBC. Manisha Gupta was asking him some questions, and he was saying he won't be surprised, building on what Carol mentioned, hard to put a price point, 5 to 15% volatility swings per day or a session, and that could be either side. So that just demonstrates what the market is interpreting. we can't put a floor to this. We don't know how high it can go or how low it can go and how quickly it can move. So I think the margin requirements are just naturally an extension of business. That's going to impact from a leverage standpoint how many contracts that you can hold, and they're the cost of doing business. It's a little bit like what we experienced in our business over the last few years. The government globally have changed the footprint as far as leverage for retail traders. And only going back a year ago, we were at 500 to 1. Now
is there any risk, any risk that this becomes a systemic threat? I was reading Javier Blas last week in Bloomberg, talking about the commodity spirals and the possibility that this could become systemic. He even compared it to Lehman Brothers. Do you think that is a threat?
Well, it's a threat if the threat is always, can you meet your margin requirements? And that's the whole nature of the business. If you can't meet your margin requirements, then you can have significant systemic risk. And they're just, you're trading counterparties. That's just the part of doing business. And that's what any exchange needs to minimize, the chance of anyone defaulting. And put your mind back to 1981. I can remember it vividly, the Bunker Hunt brothers and what they did with the silver market. So people have been cornered by aggressively buying futures contracts and other derivatives. So yeah, there's always a chance, Frank, that things can turn sour very, very quickly.
Okay. Can we pull up the question, please? Because this is going to frame what I would like to talk about in the last 10 minutes or so. So 1 month into the invasion, and the question is, with Russia already struggling to meet quotas under OPEC Plus, increasingly excluded from markets, is it time to wrap up the OPEC Plus alliance and allow a free-for-all in global crude? It's a straightforward yes or no. So please give that one a go, and then we will talk now about oil markets and OPEC Plus. I would like to get your views on that, because next week we have the second OPEC Plus meeting of the month of March. I don't think it was planned exactly to come in quite such a critical month that way. It was purely a timing thing with Ramadan coming up in the Middle East. But it is the second crucial meeting, and it comes at a really critical time, doesn't it? The deal is 400,000 plus on the table. Russia can't meet that. Several others can't meet that either. But I'm thinking more in terms of OPEC Plus was a Saudi Russian alliance. And the Saudi side of that equation has almost disappeared, hasn't it, in terms of Russian oil supply to the global market anyway. So I'm wondering what you guys think is the dynamic working behind next week's OPEC Plus meeting. Let me go to Osama first, and give me your view, please, Osama.
Yes, I've written about it as well, and I believe, and I can be wrong, of course, that whatever is the volatility in the oil markets recently, it's more about sentiment than fundamentals. And let me tell you why. I mean, even before the Russian invasion on 24th of February, oil prices were elevated, quite elevated. And what was driving that bullish sentiment was, first of all, a concern regarding an impending supply crunch, right? And secondly, a concern regarding falling spare capacity. But then you also I did some research, and there were other outlooks as well, and a realistic outlook gave the point of view that we can expect a 500,000 barrel per day surplus in the next few months instead of a supply crunch. We can expect that. We have talked about this on our show as well, that crude oil on water is still elevated. It's still higher from its 5-year average, right? And this is the fundamentals that we're talking about. Speaking about Russia and EU and the US, right now, only the US has banned Russian oil and gas in principle, right? And
Yeah.
it only consumes around 600,000 barrels per day. EU
Yeah.
has not done it. EU
But
will not do it.
may do it this week, thinking about doing it this week, perhaps.
Yeah. So that's now we're coming to this point. So, but you see that oil prices went all the way up to 140, and in 7 days it shed $40, right? Just because, I mean, not because of fundamentals, not because there's something fundamentally, something wrong going on in terms of supply and demand. It was sentiments. EU has once again started to mull over the decision to ban Russian oil and gas. And once again, we have seen prices rising all the way to 120. Before that, when only the US did that, prices fell below $100. And now we come to OPEC. So I believe OPEC Plus has been really clever, really, their strategy has paid off. They did not increase the production because they could see the difference between the paper markets, right, which are just, the volatility index has hit 80% year to date from last year. And then the physical markets, which I personally believe are not as chaotic, and they saw it. So I don't think that there is a reason for OPEC Plus right now to just part sides.
Okay.
They should continue cooperation, because not doing so, if we saw, I continue to say this, if we see a de-escalation in Russian war, and then we also see an Iranian deal happening, which is just nearing.
Okay.
Right.
That changes everything.
I see prices falling all the way back to 70s.
Okay.
Lower 70s.
But the current outlook, Carol, let me bring you into this. The current outlook, according to the IEA, is that we're going to lose 3 million barrels of Russian oil in the very near future. And in that context, how effective is the Saudi-Russia alliance? Will they continue to stick to the 400,000 for the rest of the year, or will it be wound up before then? What do you think will happen next week at the OPEC Plus meeting?
Frank, there are different dimensions to this OPEC Plus alliance. So if you look at it only from market dynamics, oil market dynamics, now I don't see why the alliance wouldn't stick together, because there isn't really direct threat to the alliance itself. We don't see conflict between them in terms of the direction or the way forward. On the contrary, we are seeing more coherent and consistent statements coming from various parts and various members. Unlike, for example, what we had in April 2020 or in March 2020, where that collaboration nearly reached an end because of the contradictory positions of Saudi Arabia, the two main players, Saudi Arabia and Russia. I don't see that happening today. Yes, you may say, okay, some members in OPEC are struggling, but they will always struggle. It's the main players there, and I see more coordination and consistency between their statements than otherwise. But it's not only the outlook for oil market. What I think is here, there is more a political dimension that is going to keep this alliance gelling together, at least for the time being. And that, they both have this very bad relationship, or even, some certain degree may be different, with another important producer, that is the USA. And as long as you see that political dimension playing into the picture, again, I don't see why OPEC Plus would collapse. And then add to that something which is less spoken and less discussed, that is the fact that after the imposition of sanctions, Western sanctions on Russia, post-annexation of Crimea, Russia became closer, particularly for the Middle East, with the Middle Eastern countries in terms of trade, in terms of investment. Just look at the amount of money that went from the GCC, from their sovereign wealth fund to Russia's investment fund. And you can see that actually Russia has been working on making this collaboration closes, not just oil, it goes beyond that, political and economic.
Yes, that's a very good point. But I'm wondering, the people who invested that money on behalf of Saudi Arabia and the UAE and others in the Middle East in Russia are viewing those investments now. They must have tanked in the course of the huge value destruction that we've seen in Russia. But Peter, let me bring you in here. I'm kind of wondering, what benefits Saudi Arabia and the other OPEC Gulf producers now get from OPEC Plus?
Frank, that's a very deep question. The benefits are strategic. There've been long-term relationships there for decades, and for OPEC Plus, well, the newer members, and it's just that's part of the gang. So I don't see any fracturing. In some ways, I think that the Saudis and the UAE have got very strong strategic ties with Russia. And what I'm expecting to see over the next couple of weeks could be a little bit of a demonstration of that. I don't know how it's going to materialize, but I just feel that there's a lot of, there's a lot of uncertainty regarding not only the war, but more importantly, production, what's happening from a consumption side, and who's going to fill any shortfalls. And I think that the relationships that I've seen it physically, the relationships that the Saudis have with Russia is very, very strong. And I don't see that in any way fracturing in the short term.
Okay. Can we get the question result, please? The answer. Okay. So, well, actually, that's rather a stronger vote for yes than I had anticipated. So that's interesting. But I do fully take the point, Carol, in particular, that the US has a big role to play here now. And I think Biden said yesterday that he expected to see an increase in a big increase in shale production by the end of next year. I would question whether that's too late. And it certainly goes against the kind of sentiment that I heard in Houston at CERAWeek a couple of weeks ago, where most of the shale producers said simply, no, we can't do it, and we're going to carry on, handing out dividends and share buybacks. So I think that is another big issue, and we don't have time for that because we've run out of time, panelists. So that was a really interesting discussion, I thought, and there are so many things going on in the world at large, of course, and in the energy sector in particular. So it's really good to get your expert views on all that. Thank you very much, Carol. Thank you, Osama. Thank you, Peter. Next week, I'm sure you'll have the Grand Master back with you. Sean Evers will be back here, I'm sure. So I will be just joining you as a member of the audience. Thanks very much, everybody.
Thank you, Frank.
Thank you, Frank.
Bye-bye.
Thank you, Carol.
Thank you.
It was a pleasure.